In this presentation, we will work a problem involving the Capital Projects Fund, the Debt Service Fund, and the government-wide activities. We will have 2 years of information, entering the information for 1 year, closing out the first year, and then continuing on for the second year. Our data will be on the left side. We're going to use this to populate the blue areas on the right side. We're going to journalize journal entries in the general journal here. We will post them to our worksheet, including our trial balance, having a beginning trial balance, adjustments, and the ending trial balance. We will have our accounts in order, assets in green, liabilities in orange, what would be the equity section in a for-profit organization, fund balance for the funds, light blue, what would be the income statement for a for-profit organization, or the temporary accounts, those that typically close into what would be the equity accounts in the dark blue. We'll have the same kind of process for the debt service fund, and the same activity for the government-wide activity, so we can compare and contrast these as we go. Let's see what we have in our data. So we have the financing for capital projects with serial bonds. We've got the rate, we've got the state grant, and we've got from the general fund. First item we're going to do is number 1, which is going to be to budget for the serial bond debt service fund. So we're going to do the budgeting items for the debt service fund. We have sales tax revenue estimated at the 210, and the appropriations of 6 months of interest is going to be the 32. So we're going to scroll over to the debt service fund. Then we're going to say this is the debt service fund, and we're going to record the budgetary type of accounts. This is really where our main focus is in the debt service fund. Budgetary type of accounts. If we look at our chart of accounts, we can think about, okay, what are the budgetary type of accounts? We've got revenue. The budget account related to it is, of course, estimated revenue. It has revenue has a credit balance. Estimated revenue then is going to have a debit balance. So we're going to debit estimated revenue. And then the other side of the budgetary accounts is budgetaries for the expenditures, which are kind of like expenses, and that is appropriations. So expenditures have a debit balance. The budgetary account then is going to have a credit balance. So the appropriations then we're going to credit. We're going to pick up this information from our data. So in P3, I'm going to say equals and scroll to the left to our data, all the way to the left, and we're going to pick up the 210. And then on the appropriations, I'm going to make this a negative in Q4 by saying negative, and then scrolling all the way to the left and picking up the 32. So there's the 32, and there we have that. And then we'll have the difference between these two accounts, which is going to be the 210 minus the 32. And I'm going to do that with the plug formula, or the negative sum being the plug formula, what we need in order for the debits to be equal to the credits. And where are we going to put that? We're going to put that to some type of budgetary, kind of what would be equity type of account. So we're going to put that up here because that's like the net income that we're going to have to put somewhere for the budgetary net income. And that's going to be up top in the budgetary fund balance. So we're going to put that into budgetary fund balance. So there is our budgetary journal entries. We're going to start to post this, starting with the estimated revenues. So we're up top in estimated revenues. We are in U8. We're going to say equals and scroll over to that 210. So that increases. And then we have the appropriations. We'll scroll down then to the appropriations. We are in U12 equals, and we're going to go up and pick up that 32,000. And then finally, we have the budgetary fund balance. So budgetary fund balance in U6 equals, and we'll pick up that credit for the budgetary fund balance. Now, we're not going to have any transaction for the government-wide activities for the budgetary accounts because this is on an accrual basis. We're not going to be posting budgetary accounts, and we're not going to be posting the budgetary account into the capital project. That was simply for the debt service account. So let's see what we have next. We're going to go to number 2. And let's highlight these as we go. So we did number 1. Let's make that green as we go because there's going to be kind of a lot of these. So we're going to highlight these as we go so we don't get confused. Number 2 says transfer from the general fund to the capital projects fund. So there's a transfer from one fund to another fund. So we could think about, well, what's going to happen in terms of the overall type of transactions for the government-wide type of transactions. And there we're going to say nothing, none, because this is just going from one fund to the other, from the general fund to the capital projects fund. So nothing's happening in the government-wide activities. Nothing's going to happen in the debt service fund because it's going from one fund to the other. The fund it's going to is the capital projects fund. So we're dealing with the capital projects fund. We're not recording transactions for the general fund here, so it would be going out of the general fund. We're going into the capital projects fund. Capital projects, we're going to say cash is increasing then. And then the other side is going to be some kind of like a revenue account or an increase, but we're going to call it other financing sources transfer in because it came from another fund. So then in F5, we're going to pick up this amount. The amount's going to be for $1,100,000. That'll be the debit and that'll be the credit. So let's record this out. We got the cash up top. We're going to scroll over and pick up the cash in cell K3 equals and scroll back over to that cash and increase that cash amount. Then we have the other financing sources. We have the inter-fund transfer other financing sources. We are in K10 equals the credit in K10, and that puts us back in balance. So there's our green zeros, and we've posted that out. The other side would, of course, be in the general fund. We're not taking a look at the general fund in our problem here. I'm going to go ahead and make this green. Take a look at number 3. It says we paid fees for the project, the capital project, that should be. We're paying fees for the capital project. Let's first take a look at the government-wide type of activities, which is going to be on the accrual basis, something that we would be more familiar with. So we're going to scroll over to the government-wide. We're in column Y, and we're going to go down to number 3. And this, if we paid for the capital project, and if we're making a large something like a building or some type of large project, a bridge or something like that, then we're going to put everything that we spend on it into the asset, which we're going to call work in process until it's done, at which time we'll transfer it from work in process to the building or the bridge or whatever the capital project is. So we're going to put this then into construction work in process, an asset type of account, and we paid cash. So we're going to say the cash is going to be the other side. We'll pick up the amount. We are in Z7. I'm going to say equals and scroll all the way back to the data for number 3 and pick up that 200,000. That'll be the debit, and the credit's going to be down below in AA8. So there we have that. Let's go ahead and post it. We're in the construction work in process. We'll scroll up to the construction work in process. We are in AE4 equals, and we'll pick up that debit, increasing that. And then we're going to say the credit's going to go to cash right above it. That's in AE3. We're going to say equals and pick up the credit. So there's the debit, there's the credit. That then puts us back in balance. If we take a look at the debt service fund, we don't have any debt service fund activity here. So it's going to be none because we're not talking about a loan or a bond or anything like that. So then if we scroll back to the capital projects fund, capital project, we're going to have a similar transaction here, but the capital projects fund is on the modified accrual basis, and we're looking at the flow transaction. So the construction, the debit's not going to go to an asset of work in process. It's going to go to the expenditures, recording the expenditure, and the credit then is going to go to cash. And the amount's going to be the same. It's going to be equal to that 200,000. So that's going to be the 200,000, the debit and the credit. Let's post this out then. We have the construction expenditure will be down below in cell K13 equals, and we'll pick up the 200,000 debit. And then the cash, we're going to scroll up top to cash. We're in K3. Something's in it. I'm going to say F2 to go to the end of it plus F2. Scrolling back down and picking up the 200,000. That puts us back in balance here. We're back to the green zeros. Let's go ahead and highlight that. We've completed that one, so we'll highlight that as is our custom of doing. And then we're going to go to the next one, number 4. Number 4 says that a contract awarded for the construction project. So we awarded a contract. So basically we're imagining here we have a contractor. We're the government. We contracted with a contractor to do the work. And so but at this point in time, no work has actually been done. At this point in time, we've just made the deal for it. And that's going to be similar to like a purchase order. Because remember, when we make a purchase order, that's kind of that funny transaction where we make the purchase order requesting inventory, but we haven't got the inventory. We haven't paid for the inventory. No financial transaction. So typically, no financial transaction. No financial transaction here just because we agreed on the contract. We haven't actually done anything or paid for anything. No financial transaction. So if we think about the government-wide type of activities, then we're going to say, what are we going to do with the government-wide activities? Well, nothing, right? None. Because under an accrual basis, nothing has happened. So in column Y, number 4, we're going to say none. The debt, we don't have any debt for this yet. All we've done is agree for the work to be done. In the capital projects fund, however, we want to then post this account, that kind of is a holding account to record the expense before the expense is actually enabled to be recorded under the modified accrual basis. So that's going to be the encumbrances account. So we're going to record the encumbrances to assign out this money that's been agreed upon to be more transparent. So we're going to debit then the encumbrances. We're going to credit the encumbrances outstanding, and that's going to be for, F11 equal to, and we will pick up that 3560. That'll be the debit and the credit. So there we have that. We're going to record the encumbrances then. So encumbrances in the capital projects fund is in K12 equals, and we'll scroll over and pick up the debit. And then the other side is in encumbrances outstanding. That is in K8. We're going to say equals and pick up the credit. So there we have the debit and the credit for the encumbrances and the encumbrances outstanding, those always being equal and opposite. Let's go ahead and highlight that. So we're going to make that green because we've completed it, and that's what we do when we complete stuff as we go here. So we're on number 5. Number 5 says we issued serial bonds for the $1,006,000, sold at 104, so we sold it at a premium, and the interest is going to be the 4%. We also have some added information that the premium was not seen during the budgeting, so we need to adjust the debt service budget for it. So this isn't something that we included in the budget, therefore, so we're going to make basically an amendment to the budgetary accounts as well. Let's first take a look at the governmental activities, because that's going to be on the accrual basis. So we'll scroll over, and this will be looking most familiar. Then I would take this transaction that we use on the accrual basis, on the budgetary activities, on the government-wide type of activities, and then take it apart to figure out what would happen in terms of the other types of accounts that are going to be affected, the other fund accounts. So we're going to issue the bond, so we're going to be in Y12. So Y12, we're issuing the bond. Why? Because we're getting cash. This is going to be a financing type of activity. So we know that cash is going to be increasing for the issuance of the bond. The other side then is going to go into a payable account because we owe the bond. So the bond payable is going to be a liability account. And then I'm going to record the liability account first because we know what that is. We know the face amount of the bond. I'm in AA13. I'm going to say negative instead of equals. Scroll all the way back to our data and pick up the face amount of the bond, which is going to be that $1,006,000. Now note as we're here, before I hit enter, that we sold it at 104. So that's 104%. So we sold it at 104% of the face amount. So how much cash did we get? We got this plus 4%, or I'm going to do this with a formula, negative of this times 100%, 1.04. 100% plus 4%, 104%. And that gives us the 1,006,664. And then the difference then is going to be the premium over and above. That's going to be our plug formula. The cash we got over the face amount of the bond is what we need in AA14, negative sum of these items. The plug formula, that's going to give us the 64,000. We're going to put that into the premium on the bonds payable. So that's right underneath, right below premium on the bond payable. There we go. So here is, let's post this out. We've got the cash first. Cash is going to go up top. We're in cash is going to be in cell AE3. Within AE3, I'm going to select F2 or on the keyboard plus F2 and then scroll down with the arrows and enter. And then we have the bond payable. So bond payable is going to be here in AE6. We're going to say equals, scroll over and pick up the bonds payable. Then we have the premium on the bonds payable. That's going to be right below the bonds payable in AE7 equals, and we'll scroll down and we'll pick up the premium on the bonds payable. So there we have that. We're back in balance. So now we want to take this and consider, okay, what's going to happen to the debt service fund? Because now we're dealing with debt stuff. So this should affect the debt service fund. Now note what's not going to go on the debt service fund is we're not going to be recording the bond payable because it's going to be on the modified accrual basis. We're recording basically the financing of it, which is going to be the premium on the bonds payable. So we're going to record basically in essence the premium on the bonds payable there, and we're going to debit cash and then we're going to credit the premium on the bonds payable. We're going to put it into an other financing sources account. And then we're also going to have to deal with the fact that the estimate needs to be adjusted, but let's first do this. We're going to scroll back over. We're going to be in number 5, and we're going to say cash is going to be debited. So we'll increase the cash. And then the other side is going to go to other financing sources. So we're going to say other financing sources. So it's going to be the other financing sources, and it's going to be the premium on the bond. So make sure you don't pick up the estimate. It's not the estimate. It's going to be the other financing sources. And we'll pick up the number. I'm going to say negative, and then I'm going to pick up that 64,000. So it's the 64 that I'm taking apart from the journal entry and the government-wide activities. There's the debit and the credit. Let's post this out then. We're going to scroll up cash first. So we'll scroll up to cash up top in U3 equals and scrolling down and picking up that 64,000. And then we're going to get the other side, other financing sources. So other financing sources, we're down here in U11 where we say equals and we scroll over and pick up the credit, and that'll put us back in balance. Now the other thing we'd said is that we didn't have this in the estimate. And the point here is we want to just show that we might have to adjust the estimate. So notice that the estimates usually kind of hang out the whole time period, and then at the end we'll reverse the estimate. Here we didn't include this in the estimate, so we're actually going to adjust the estimate now. So we're going to go in and adjust the estimate, and so we're going to say this is going to be an estimated other financing sources, estimated other financing sources, and the other side is going to have to go to the budgetary fund balance. So we're going to adjust the estimate account for this amount that we didn't include in it. And there we have that. So we're going to post this out. Here's the estimated other financing sources. So that's going to be up here in U10, where we're going to say equals and scroll down to the 64,000. And then the other side is going to be the budgetary fund balance. So there's something in that. That's in U6. So I'm going to say F2 plus F2. Scroll back down and pick up that 64,000, and then that'll put us back in balance. Now let's go look at the capital projects fund. So the capital projects fund, this is why we took the money out. Now in here, we're gonna say that we're going to increase the capital projects fund for the amount that was appropriated for the capital project, which is the face amount of the bond. So we're not going to take the full cash amount, but the face amount. So if we piece this apart, then again, from the journal entry we made, let's look at the government-wide transaction one more time. If I scroll over to the government-wide transaction, now we're going to be picking up the basically cash. It's going to go into the bonds payable. Cash is going to go up, but it's going to go up by the bonds payable amount, not the full cash, which would include the premium of this. And we're not going to put the bond payable on the books. It's going to be in other financing sources again. So if we scroll back over, I'm going to go to the capital projects fund, see what this will look like. We're going to say, all right, capital projects fund is going to go up because that's what we're funding with the capital projects. And then the other side is going to go to other financing sources, proceeds of the bonds. So then we'll pick up the amount, which is going to be equal to, and we'll scroll back over. And I'm picking up this 1,600,000, the face amount of the bonds. I'm kind of picking apart this journal entry in the government-wide activities. The debit should be positive, so I'm just going to put a negative in front of it to flip the sign. So there's the debit. And there's the credit. So let's post this out. We got cash up top. So cash is up top in cell K3. Something's in it. So I'm going to say F2 plus F2. And then scroll back down and we'll pick up the debit to cash. And then the other side's in other financing sources on the bonds. So other financing sources. We've got proceeds on the bond. That's going to be in K11 equals, and scrolling back over and we'll pick up the credit and enter. And there we have that. So the debits equal the credits, and so we're good to go. Let's see what we have next. We're going to make that green because we've completed it, and so that one is going to be green, not red. Don't make it red, or you can if you want, but I'm going to make it green. And then we're on number 6. Number 6 says, paid utility fund for the project from the capital project fund. So now we're going to say we paid basically utilities bills for the capital projects. These were necessary for the capital projects. The utilities is another fund, however, within the government. So we paid the utilities fund for the capital project. Let's think about this from the government-wide type of activities first. We're going to scroll back to the right, and we're going to go to the government-wide activities. Now, the utilities is going to be a proprietary fund, so we're going to record this activity. And again, we're going to increase the construction work in process. We got to increase that because this is going to be part of the whatever we're building, the bridge or the building or whatnot. So we're going to increase the debit to construction work in process. This is similar to, this is like an accrual method basis we're using. And then the other side is going to be going to cash. So there's our transaction. We're going to say the amount is going to be equal to, and we're going to scroll back over and we're going to go to the 80,000. So the 80,000 is going to be the amount we're going to use on the debit and on the credit. So we've got the construction work in process. If we scroll up top, we're in construction work in process. We are in A4, where we will say F2 plus F2, scroll back down and pick up the debit. Then we're going to go to the cash right underneath it. That's going to be in AE3, F2 plus F2, picking up the cash. And there we have that. That then puts us back in balance. Now, there's nothing happening to the debt service activity here, so no debt things are going on. So we're going to say number 6 on the debt service. In column O, no activity. And then we're going to go to the capital projects. If we go over to the capital projects, that's going to be in column E. We're going to say that it's going to be a similar type of transaction. Cash is going to be credited, but the debit isn't going to go to the asset account because this is the modified accrual basis, and it's going to go to the construction expenditures because we're tracking the flow of resources here for the construction project. So that's going to be the debit to construction expenditures, and the credit then is going to go to cash. And once again, that's going to be for the 80,000. So we're going to pick up the 80,000 down below. There's the 80,000. That's going to be the debit and the credit. So let's post this out. So we got the construction expenditures scrolling back up top. That's going to be in K13. So we're going to say F2 plus F2, scroll back down, pick up that debit. Then we're going to say the cash is going to be the next item. So we're going to be up top in cash. That's in K3, where we say F2 plus F2, scroll back down to the cash. That's going to be the credit. And there we have it. And that puts us back in balance. All right, back to the data. We're going to go back to the left and we're going to make that green. That one has been completed. Green means it's done, means it's go or it's been gone. So number 7. 7 says that we paid interest and then we have the reduction of the premium. This is going to be on the bonds up top. So we've got the bonds up top here. So we're going to be paying the interest at the 4% semi-annual. Let's first think about the government-wide activities because that's going to be on the accrual basis. So we're going to go over to the government-wide activity. That's going to be in column Y. We're going to be down here in number 7. We know that cash is going to go down. We're going to pay money. So I'm going to put that down below. I'm going to skip 3 lines because I'm going to put the credit. There's going to be 2 accounts above it. So we're going to say cash is going to go down. And I'm going to calculate this. I'm going to do this in the formula here. So I'm going to say negative to flip the sign to make it a negative number. Scroll all the way back over, and I'm going to pick up the data here. It's going to be the face amount of the bond times the 4% interest. So that 1,000,006 times 4%, that would be for a year. We're going to say it's semi-annual, therefore dividing by 2 to make it half a year, 6 months, semi-annual. Okay, so there we have it, 32. And then we're going to say that the premium, how much is the premium going to go down by? Well, the problem's just going to give us that. They're going to say, well, the premium's going to go down by 1,600. So we're going to say of that, the part that's going to be the premium is going to be decreasing 1,600. I'm just going to say this is equal to the reduction in the premium, 1,600. And then the difference is going to be the interest. So the difference is going to be equal to this minus this. That's what we need, but I want it to be a debit. So I'm going to double click on it. I'm going to put a negative in front of it and brackets around it to just flip the sign to make that a negative. So the 30,400 plus the 1,600 equals the 32,000, and therefore we're good to go. We're in balance. Everything looks good. That's going to go to the interest expense. So that's going to be expense, long-term debt for the interest. So this is kind of our normal type of transaction when we pay the semi-annual interest on the bond. So let's record this. We're going to go to the premium on the bond payable. If we scroll back up top, we got the premium on the bond payable. That's in AE7. Something's in it. So I'm going to say F2 plus F2. Scroll back down, and we're going to pick up that debit amount of the 1,600. Then we're going to be posting the expense. So the expense is going to be down in AE13 equals, and we'll pick up that 30,400. Then we have cash. Cash is going to be the credit. Scrolling back up top, we are in cell AE3, F2 plus F2, and then we'll pick up the cash, which is decreasing for that 32,000, and there we have it. So that puts us back in balance. Now let's consider this transaction and think about, okay, what's going to happen with the debt service fund? How can we take this apart and think about what's going to happen there? In the debt service fund, then, we're going to record the cash. Cash is going to be going down by the 32, and then the other side, we're going to put to interest. So the other side is going to be an expenditure for interest in the modified accrual basis. So we're going to scroll back over, and obviously that's because we're not dealing with the premium on the bonds payable, a liability, long-term liability type of account, and the long-term liability is there in essence because of the financing, the interest related to it. Okay. Let's go back to number 7. We're in the debt service fund. Debt service fund number 7. We're going to say that we're going to debit the expenditure. So the expenditure is going to be the debit. The credit then is going to go to cash. So cash will be the credit. So there's the debit and the credit. It's going to be for that 32,000. I'm going to say this is equal to. We'll pick up the 32 from our journal entry over here in the government-wide activity so we can kind of see the relationship. I want to make it a positive number, so I'm going to put a negative before to make it a positive because it multiplies times -1. That is the debit and the credit. Let's post this out. So we're going to go up top. We're in the expenditures in U13. I'm going to say I'm going to just say equals and scroll over to the 32,000. 32,000, and then we're going to go to cash up top. So let's scroll up top to cash. Something's in it. I'm going to say F2 plus F2. Scroll back down and pick up that 32,000 of cash, and there we have that. And then if we scroll over to the capital projects fund, we note that there's nothing in the capital projects fund here, so no transaction for the capital projects fund. Let's scroll down, and we're going to make that green because that has been completed, and we'll go to the next item. I want to make it this green. That's the green we've been using. So now we're on number 8. Number 8 says that we have sales tax earmarked for the debt service collected. So we got tax revenue that's been collected. It's going to be earmarked for the debt service. So let's see what's going to happen first to the government-wide activity on the collections. We're going to scroll over to the government-wide activity first. That's going to be in column Y, and we're going to be down in number 8. We're going to say cash is coming in. We've got the tax revenue from the government-wide level. So tax is going to be an increase to cash. And it's going to be a revenue. So it's revenue to the government for the taxes that are increasing to the government. So tax revenue. There's the debit and the credit. I'm going to pick this number up from the data equals and scroll all the way back to the data, which is going to be in number 8. And that's going to be the 210. That's going to be the debit and the credit. So let's post this out. We got the cash up top. We'll pick up the cash. So cash is up top. And we are in AE3. I'm going to say F2 plus F2. Scroll back down, and we will pick up the debit to cash, 210. And then we want to pick up the, what's the revenue? Revenue's next. Revenue is going to be up in cell AE11 equals, scrolling down to pick up that amount of revenue, 210. There we have that. That puts us back in balance. Now we'll see what happens with the debt service fund because it's been earmarked for the debt service fund. Therefore, the debt service fund will look much the same. Cash is going to go increase in the debt service fund and increase some type of revenue account. So we're going to say, all right, let's scroll back to the debt service fund. We are in column O in the debt service fund. We are in number 8 where we're going to say cash is increasing once again. Scrolling up to the cash amount. Here's that item. Don't get confused about this transaction down here, the trial balance down here. That's going to be used for the closing process. So then we're going to say that the other side is going to be some type of revenue account. So we're going to have a revenue type of account. And the amount's going to be the same. I'll pick it up from the transaction we just did in the government-wide activity. That's going to be the 210, same 210 for the debit and the credit. Let's post this out. Looks much the same. Cash is going to be up top. We're going to be up top in cash. That's going to be in U3. We're going to say F2 plus F2. Scroll back down, and we're going to pick up that 210. And then the next amount is going to be the revenue. So we're going to scroll up and pick up the revenue amount. So we are now in U7, where we're going to say equals and scroll over to pick up the revenue account. So there's the credit in revenue and enter. So there's that. That puts us back in balance. Let's scroll over now to the Capital Projects Fund. Within the Capital Projects Fund, there's going to be no transaction in the capital projects. Okay, so let's see what our next one is. We're going to scroll back down. We've completed number 8, so I'm going to highlight it. Going to make it green, as is our custom of doing when we've completed stuff. We're now on number 9. We now have the billing on the project, so we're going to have the billing for the construction project and we have the approval of the cost, the $1,600,000. So this is going to be for the construction project. We're going to scroll over. Let's post this first to the government-wide activities. We're going to scroll over to the government-wide activities, and we're going to say that we have government-wide activities. Basically, we have an approval for the billing of the construction progress as it's going, for the work in progress. Therefore, we're going to increase the asset of the work in process. Remember, we're building some like big thing, like a bridge or a building or some kind of street or something. And so we're going to increase the asset of work in progress. And then the other side, we haven't paid it yet. It's been approved. And therefore, we're going to go to a payable account, a liability account, vouchers payable. We're going to call it, we're going to call it contracts payable. Contracts payable. So contracts payable, that's going to be the debit and the credit. So we'll then pick up the amount from our data. We are in cell Z26, where we're going to say equals and scroll all the way to the left, and scroll down. And we want to pick up that 1,600,000 and enter. That's going to be the debit and, of course, also the credit. So let's post this out. We got the construction work in process as we're building this big capital project thing, the building or the bridge or the street. And we're going to scroll back up top, and we are in cell AE4, where we're going to say F2 plus F2, and then scroll back down and pick up that debit amount of the 1,000,006. And then we want the contracts payable liability account. So we'll scroll back up and we'll pick up the contracts payable. That's going to be in cell AE8 equals, and we will scroll back down and pick up that 1,000,006 on the liability. There is the debit and the credit. Now we want to consider what's going to happen to the debt service fund and the contract or the capital projects fund. And so there's nothing in the debt service fund here because we're not dealing with any of the debt, so there's nothing there. When we go to the capital projects fund, then we're going to record this in the capital projects fund as well, but we're going to have to reverse the encumbrance. So we want to make sure to reverse the encumbrance, and then we'll record the activity not to an asset work in progress, but to the expenditure type of account, because we're recording the flows modified accrual basis as opposed to the accrual basis. So let's scroll over and we'll pick up the information in where are we at? We're in the debt service fund. We're going to say none. Nothing's happening here. Nothing's going on. Nothing to see here. And then we're going to go to the left and we're going to go to the number 9 in the capital projects fund. So within the capital projects fund, we need to reverse the encumbrance. So you'll recall we got the contract with the contractors. We put it into the encumbrance here before we could then put it to where it should go in accordance with the rules of the modified accrual, which is expenditures. So we wanted to record this first, and we had the equal and opposite amount up here in the encumbrances outstanding. Well, now we need to reverse this portion of it and then record the actual expenditure related to it. So we're going to first reverse the encumbrances. We have a credit in encumbrances outstanding, so we're going to debit the encumbrances outstanding. So let's do that first. We're going to debit. This equals the debit to encumbrances outstanding. And then the other side is going to go to encumbrances. So encumbrances. And then the amount in cell F24 is going to be equal to, we'll scroll down to the amount is going to be that 1,600,000. That'll be the debit and the credit. Let's post this first, and then we'll record the expenditure, which will be the same amount. So we're going to scroll back up top. We're going to pick up the encumbrances outstanding. That's in K8. Something's in it. So I'm going to say F2 plus F2. Scroll back down, and we're looking for that encumbrances outstanding. There we have it. Next one is encumbrances. So encumbrances, that's going to be in cell K12. Something's in it. So I'm going to say F2 plus F2. Scroll back down, and we're going to pick up the encumbrances. That will then be a credit, and that'll put us back in balance. So now we've reversed the encumbrances. They're still equal and opposite. We're not completely done with the contract yet, but we've done this portion of it. Now we'll record the expenditure. This will look more like the transaction we did in the government-wide activities, but instead of putting it into the asset account, we're going to be putting it into an expenditure type of account, construction expenditure, and the other side is going to go to the contracts payable. So the other side, contracts payable. There we have it. That's the debit and credit. Now we can post that out. So here's the construction expenditure. We're going to scroll back up top, and we're going to pick that up in cell K13. We're going to say F2 plus F2. Scroll back down and we'll pick up the construction expenditure, and then the other side is going to go to the contracts payable. Contracts payable, that's going to be up top in cell K5 equals, and scrolling back down, and we'll pick up the payable amount, and there we have that. That'll put us back in balance. Let's scroll back over and see what we have next. We're going to say that number 9 has been completed, so we're going to make that green, make it green, and there it is. Now we're on number 10. Number 10 says that we paid the contractor and we retained 4% of it. So we have this amount that we owed the contractor. We're going to pay the contractor, but we're going to keep 4% to make sure that the work is going to be completed. We're not going to give the full amount. That's going to be our practice. So we're going to do this first in the government-wide type of activities. That's will be the accrual basis, what should be most familiar to us. And so we're going to scroll back up top, and we're going to say number 10, we're going to pay off the contracts payable. Now, we have the contracts payable on the books, of course, for the $1,600,000. We're going to make that go down to 0, but we're going to increase the contracts payable for the retained percentage, the amount that we're going to hold back until the contract is completed, and then we'll pay the difference out with cash. All right, so we're going to debit the contracts payable in Y29. That's Y29, and we're going to pick up the contracts payable, and then we're going to credit the amount that we retain, and that's going to go into the contracts payable retained percentage. And then we're going to say that the cash is going to be the credit that we're going to pay out. Of course, we're going to pay out cash. So there's our transaction. So we're going to pick up the contracts payable is going to go down by the full $1,600,000. Then we're going to keep 4% of it. So I'm going to say we're going to increase the payable for the retained portion. I'm going to calculate it as negative to flip the sign of that number times 4%, 0.04%. There we have that. And then the difference between the two is how much we're going to pay the contractor. Negative sum, plug formula to do this. 1,600,000 minus the 64, 1,536,000. Okay, so debits equal to credits, so we look good. We're okay. We can post this out. We have the contracts payable first. Let's scroll up and pick up the contracts payable. We're up top in cell AE8. Something's in it, so I'm going to say F2 plus F2. Scroll back down, and we're going to pick up the contract payable amount of the $1,600,000. Then we have the contracts payable retained percentage. So we have the contracts payable retained percentage. That's in AE9, where we say equals, and scroll back down, and we'll pick up that $64,000. And then finally, we have the cash. We're going to credit cash, so we're going to scroll back up top. We're going to go into AE3. Something's in it, so we're going to say F2 plus F2. Scroll back down, picking up the cash amount of the 1,536. That, of course, puts us back in balance. So now we can look at this and we can consider, what are we going to do for the debt service fund? Well, nothing. There's no debt service fund activity here, so we're not going to do anything there. The capital project fund? The capital projects fund is going to be looking much the same. We're going to be paying off the contractor. Cash is going to go down, and we're going to record the retained amount. So let's do that. We're going to go back over to, we can go here to O and say that this is going to be the debt service fund. In number 10, we're going to say none. Nothing's happening there. Nothing's going on. Nothing to see here. And then number 10 in the capital project fund, we're going to have much the same type of transaction. So we're going to say that the contracts payable is going to go down because we paid off the contract payable. It's a short-term liability, and therefore on the modified accrual basis for the capital project fund, we're going to put part of it, we're going to retain part of it, so we're going to put that into the contracts payable retained percentage so that we can kind of have something to hold over the contractor to make sure they complete the contracting. And then we're going to go back up and say that cash is going to go down by the difference between the two. And the amounts are going to be equal to the 1,600,000, same amount. We'll recalculate the amount that we're going to retain, which is the 1,600,000 times 0.04 or 4% of it. And then we'll take the negative sum, or the plug formula. It will be the difference that we're going to pay for the cash to the contractor. There is our transaction, looking the same as it did in the government-wide activities. Let's post it out. We're going to go to the contracts payable first. Scrolling back up top, contracts payable, that's in cell K5. Something's in it, so I'm going to say F2 plus F2. Scroll back down, and we're going to pick up that 1,006,000. Then we got the contracts payable, the retained amount. So that's going to be right underneath in K6 equals, scrolling back down, we've got the contracts payable, the retained amount. So there we have that. And then we've got the cash. So we're going to record the cash next. So we'll scroll back up, and that is in K3. We're going to say F2 plus F2 and scroll back down. We're going to pick up the cash amount. There we have that. And that should put us back in balance with the green 0. So we're looking good. Scrolling back over, and let's go ahead and highlight that and say that we have completed number 10. And so I'm going to right click and make that green, and we're going to move on to number 11. Number 11 says that we have grant money that was received for a capital project for the capital project. So money's coming in for the capital project. Let's go first to the government-wide activities. And so we're going to scroll over to the government-wide activities. That's going to be in column Y. So within column Y, government-wide, we're going to scroll down, and we are on number 11. We're going to say that cash is going up. So we're going to get money, and it's going to be some type of revenue account that we're getting the money for the grant. So we're going to scroll back up and say we've got cash coming in. That's nice. And the other side is going to be some type of revenue account. We're going to put it into program revenue for the general government. We're going to say program revenue, general government. That'll be the debit and the credit. Let's pick up the amount. I'm going to say equals and scroll all the way back to our data to pick up that amount for it, which is going to be the 1,050,000. There it is, and that's going to be the debit and the credit. There's going to be our transaction. Let's go ahead and post it out. We got the cash first, so we'll scroll up to the cash first and post it. That's going to be our first account. And that's in cell AE3. Something's in it. Going to say F2 plus F2. Scroll back down, and we will then pick up the debit in cash and enter. Then the next one, we've got the program revenue for the general government. Program revenue for the general government. That's going to be down in AE12 equals. Scrolling back down. We're going to pick up that 1,050,000 and enter. So there we have that item. So now we can think of this journal entry and think about what's going to happen to the other funds. Well, nothing's going to happen to the debt service fund because we're not dealing with any payment of the long-term debts, no bonds or any activity here. And the capital projects fund is going to look much the same because this money was received for the capital project. So I'm going to scroll over debt service. I'm going to say none. Nothing's happening here. Nothing to see here. The debt service fund, that's in column O. And then we're going to go back on over to the capital projects fund, this will look much the same. Cash is going up, and it's for revenue. So we're going to say cash is going up in number 11 for the capital projects fund, increasing the cash. The other side is going to be going to a revenue. So the other side is going to be our revenue account, and the amount will be equal to, and we're going to pick up the 1,050,000. That'll be the debit and the credit. So there we have it. Cash is increasing. Cash is up top. We're going to scroll up top and pick up the cash. That's going to be in K3. Something's in it. So we're going to say F2 plus F2. Scroll back down, and we're going to pick up the cash. That's going to be the debit. And then the next one is going to be revenue. Revenue right below it. So we're going to say revenue. That's going to be in K9 equals. And we're going to scroll back down and pick up the revenue item. And so there we have that, and that should put us back in balance. Let's go back over to our data now. So we're going to go back over to our data, and we're saying we're completed number 11. So I'm going to make that green because it's been completed. So we're going to say that's going to be green, done, and done. Now we're going to do the closing entry. So we're going to say the first year has been completed. We're going to close out the temporary accounts. And then we have the capital project amount assigned, and we'll take a look at that as we go through this. Let's first think about the government-wide activities. That's going to be more on the accrual basis. How would we close out basically the government-wide activities? It is on the accrual basis, which is more familiar. What we're going to do is we're going to say, here's our ending balances on the government-wide type of activity. And we're going to say those are our ending balances. We're going to pull those over to another worksheet so that we can see just the adjusting or closing entries. So we're going to say those are going to be our beginning balances down here in our closing trial balance. So this is going to be our closing trial balance where we'll put our adjustments in the middle, and then we'll see what happens. So here's going to be where we are Now, this would be the ending trial balance, and then we're going to adjust it to get to the post-closing trial balance. And this would be what you would expect in a for-profit organization. All the accounts below what would be the equity section in a for-profit organization, net position here, temporary accounts, kind of like income statement accounts that are going to be closed out, to what would be retained earnings or the capital fund, in this case, the net position amount, asset minus liabilities account. So what we're going to do is we're just going to do whatever we need to do to make this zero, that zero, that zero, and we're going to close it out to what would be similar to the equity account or retained earnings net position here. So the general revenues has a credit, so we're going to debit it. We're going to do the opposite thing to it to make it go down. So we're going to debit that for whatever's in it, which happens to be 210000. And then this one has a credit in it as well, because it's kind of like a revenue account. It is a revenue account. So we're going to say that that one's going to be debited for whatever's in it, which happens to be here 1050000. And then this one has a debit in it, so we're going to credit it to make it go down, because we're going to do the opposite thing to it. So for the expenses, we're going to credit it for whatever happens to be in there, which is 30,400. Now we need a credit to be in balance here, so this is going to be our plug formula, negative sum. And that's our plug. That's the difference we need. And it's going to go into what would be kind of like the retained earnings, the net position account. So there we have that. There is our transaction. Let's record this and see what happens. So here's going to be the debit. So we're going to go to the general revenues, taxes, and this is going to be equal to the 210, making it go to 0. Next, we'll post this one. So we'll scroll down. That's going to be right below in AE 42 equals. We'll post that debit, making it go to 0. Next, we'll do this one. And so we're going to be here in AE 43 equals, and posting that, making it go to 0. And then finally, the difference going to like the equity similar account is AE 40 equals, and we'll pick up that credit. And so there we have that. So now we've closed out. This is like our post-closing trial balance. It is our post-closing trial balance. We have nothing below what would be kind of the equity section, or the assets minus the liabilities, or in the temporary accounts, and those are 0. Let's do the same process now for the debt service fund. So we're going to do this debt service fund. We've got the same thing, ending balance here. We're going to take those ending balances and say that's going to be our beginning balances for the closing entry worksheet, and then we'll enter our closing entries. Now, it's a little bit more complicated here, because you'll recall that we entered a budget for this one. So we're going to have to close out the budgetary accounts. So let's just name which ones those are. Anything that says estimate is a budgetary account. So this is an estimated revenue. That's a budgetary account. And then this one says estimated other financing sources. That's a budgetary account. And then this one says appropriations. That's a little funny one. It doesn't have an estimate in it. It doesn't have expenditures in it. But that too is a budgetary account. And then the difference in the equity section, we're not going to put it to the normal, kind of like the retained earnings equivalent fund balance type of account. We're going to put it into the budgetary equity type of account, the budgetary fund balance account. So we'll first reverse this. We'll reverse this exactly, and this should make everything go to 0, including the equity account. And then we'll do the normal type of closing entry for the normal type of accounts after. So we're going to say this. Let's do this the same way. Here's the revenue. Estimated revenue. It has a debit, so we're going to credit it. I'm not going to put the debits on top here. I'm going to build this from top to bottom the way I would think about it, and I think that's the easiest way to go. If you have to reconstruct it after you build it, then reconstruct it, putting the debits on top if you're dealing with software that needs it in that format, or Picky Supervisor. So then we're going to say the credit's going to be, it's a debit, so we're going to credit it for that 210, so negative 210000. So there we have that. And then we have the next one, which is going to be estimated other financing sources. It's got a debit, so we need to credit it. So I'm going to say this is going to be the estimated other financing sources. It's got a debit, so we're going to credit it for whatever's in there, 64,000. So there is that. And then we have the appropriations. So the appropriations is a budgetary account. So there is that. It's got a credit, so we're going to debit it. So we'll debit it for 32,000. And then the difference is going to go here. So we got the credits minus the debits. I'm going to use the plug formula, negative sum of these, and that gives us the difference. And it's going to go to the budgetary fund balance. equals the budgetary fund balance. And you'll notice that's exactly what's in the budgetary fund balance, because this thing should totally tie out, because it was recorded in the first transaction. Also note, we can't reverse exactly the first transaction because we have this adjustment to it, but it should always reverse exactly. It should all go down to zero, including the equity account. Let's post it. We got the estimated revenues. Estimated revenues up top, that's in U35 equals, we're going to point to that 210 and enter, so it goes down to zero. Then we got the estimated other financing sources. Estimated other financing sources is in U37 equals, and we're going to point to that 64,000, making it go down. Then we've got the appropriations. So if we go down to appropriations in U39 equals, we'll pick up the 32, it goes to zero. And then we're going to put that to the budgetary fund balance. That's going to be in U33, so I'm going to say equals, and pick up that amount, and it goes to zero. So those budgetary accounts now gone to zero. Next, we're going to close out the normal type of income statement kind of accounts. We've got the revenue, we've got the other finance, nothing's in other financing sources, and then we have the expenditures. So we're going to close out the normal type of accounts now, and we'll do the same thing. We're going to make them go to zero. We're going to do this with a separate journal entry. Revenue has a credit in it, so we're going to do the opposite thing to it. We're going to debit it. So I'm going to go and just build another journal entry. We're going to say revenue has a credit. We need to debit it to make it go down for whatever's in it, which happens to be 210,000. And then we have the other financing sources for the premium. That's the 64,000. So this is going to be other financing sources. It has a credit, so we're going to do the opposite and debit it for 64,000. And then we have the expenditures, and it's got a debit, so we're going to credit it. So we're going to say, all right, expenditures, we're going to credit it for whatever we need to do to make it go to zero. So there we have that. And then we can say that we need the plug formula, the negative sum. So I'm going to say negative sum, the plug formula, whatever we need for the debits to equal the credits, 242. And that amount's going to be the fund balance. So we're going to say that's going to the fund balance, similar to the retained earnings type of account. There we have that. Let's post this out. So we're going to go to revenues up top. That's in U34 equals, we'll pick up that 210. Then we've got the other financing sources. So the other financing sources in U38 equals the 64,000. And then we've got the expenditures. Expenditures in U40 equals the 32,000. And then finally the fund balance is going to be up top in U32 equals, and we're going to pick up the 242. So there we have it. Now our post-closing trial balance, not usually a lot of activity in the debt service fund, because we're just looking at the financing. And also note that we don't have that issue in other funds that we have with encumbrances that sometimes hangs out down there. We don't have encumbrances, so that's nice. But we still have the budgetary accounts typically. And so there we have it. The assets equal the liabilities plus the equity. Now let's do the same thing for the capital projects fund. So we get to do this one more time. It's going to be great. And so we're going to say the capital projects fund. This is our ending balance so far. We're going to say that that's going to be our beginning balance for the closing process. So here's our beginning numbers for the closing process. Same type of activity. We're going to close out the temporary accounts, those below the light blue section. What would be the equity type of section into the equity type section. Same kind of issue. We still have the budgetary account type of activity that we would need to reverse out. Now we haven't recorded the beginning budgetary balances in terms of the estimated revenues and appropriations, but we have been using the encumbrances outstanding. So just note that as we go through this, we're not going to be closing out the encumbrances outstanding. And I would think of the encumbrances outstanding like not really the true kind of budgetary account, because we're not going to record them at the beginning, but more of like a holding account or a clearing account. They're going to go up, they're going to go down, they're going to be a holding account until we can record the expenditure as we normally would in accordance with more of an accrual basis or a modified accrual. So that's going to be the tricky part here. These two are just going to be hanging out here. And then they also said that we had 1,100,000 that's going to be assigned. So that just means that we're going to record that amount to basically breaking it out into a separate category in the fund balance section up top. Okay, so let's record this. Basically, it's going to be the same type of process. We need to make all of these blue accounts 0 except encumbrances. So we're going to go back up top. We're going to say revenue. It's got a credit in it, so I'm going to debit it for whatever's in there. So here's the revenue account. What's in there? That 1,050,000. So we're going to say 1,050,000. And then we have the other financing sources. We're going to debit it because it's got a credit in it. So we're going to pick up that amount. We're going to debit it for 1,100,000. And then we have the other financing sources for the proceeds on the bonds. It's got a credit in it, so we're going to debit it for 1,600,000. Then we have encumbrances. We're not going to do anything to that. We're going to keep that there because this is going to just match out to its own, kind of equity type of account. And then we're going to pick up the construction expenditures. It has a debit in it, so we're going to credit it for whatever we need to make it go to 0. Now we have the debits. We need something to be in balance because it's going to be a credit. This is going to be the plug formula. I'm going to say negative sum of these items to pick up whatever we need to be in balance. And then we're gonna break that out. And actually, I'm going to break that out a little bit differently. I'm going to say that we have an assigned portion of that 1,870,000. And I'm going to delete this actually and pick this up from our data. That's the 1,000,001. And then we'll do the negative sum to take the debits minus the credits. That's what we need to be in balance. And that's going to be the fund balance restricted. So there's going to be our transaction. So let's post this out. We're going to say, all right, revenues is going to go down. Revenue up top, that's going to be in K38 equals this amount. That makes it go down to 0. Then we're going to pick other financing sources. Other financing sources in K39 equals the 1,000,001, making it go to 0. Then we have the other financing sources for the proceeds on the bonds in K40. We're going to say equals the 1,000,006, making it go to 0. Then we've got the construction expenditures down here. That's in K42 equals. We'll pick up that amount, making it go to 0. And then we're going to say the fund balance assigned. So the fund balance assigned is going to be in K36 equals the fund balance assigned. And then we've got the fund balance restricted. Fund balance restricted. And all we're doing is allocating between the equity section between the restricted and assigned amounts. So there we have that. So now we have our post-closing trial balance. It's a little funny looking because now we've got these restricted and assigned. We also have the outstanding encumbrances outstanding. And we also have this account down here that looks like it should clear out because it looks like a temporary account, but I would call it more of a clearing account. It doesn't go away, or it possibly may not go away until we basically are able to record the related expenditure for it and therefore able to reverse it. But it's not going to show up on the financial statements because we're just going to eliminate both sides of it. So just recall that. So there's going to be our post-closing trial balance. Then we're going to move, next time we're going to continue on to year 2.